We're delighted to have Jae Yoon on the show today. Jae is the former Chief Investment Officer for New York Life Investment Management and Chairman of New York Life Investments Asia. Prior to New York Life, Jae was a Managing Director at Merrill Lynch and holds a Master's in Engineering from Cornell University. He is also a CFA charter holder and an old friend of the show. Jae, welcome back to the show. So glad to have you here today.
Thank you, and thanks for inviting me, and hello, everyone.
So, we're just a month or so into 2026. Pretty exciting month. What is your market outlook now? I mean, in some ways, the S&P 500 has gone on a solid bull run from October of 2022, but the PE has gone from about 20 to close to 30 at this stage. What are you thinking on the bull market? Does it still have legs with a little more volatility, or do you think there's a little bit, there are more clouds on the horizon?
I guess, I've had a little bit of a thought from early last year on this show and other shows or other stations. I've been saying, valuation is something to start paying attention. So we talked as well, moved to Japan, China, parts of Europe after they announced the infrastructure investing finally, and diversify your portfolio beyond US because of valuation. Now, we had Liberation Day and an amazing rally in the US, but net, as you saw the 2025 finish, you would have been better off in Japan and China, mid-cap in Europe, defense companies. So that trade actually has been okay. Now, at the end of the year, on your shows as well as on other shows, I've made a call that as I look at 2025, having a fourth up market for S&P is extremely rare. Three was unusual, but happens, occasionally. Four happened maybe once or twice before in the entire history of U.S. market. So it's a challenging to try to make that happen statistically. Now, what's happening now, in these years is there's a massive government fiscal spending that's unusual. So in that regard, unusual things will happen as a result. In the US, in Europe, in Japan, in China, in Korea, governments are spending, okay, to keep the economy going. So I actually think this year, focusing back on the US with that big picture, with Trump promising to, and having already approved with Congress and Senate, the OBBB towards consumers. That's coming in second quarter. So at the end of the year, I made a big call about start pivoting from S&P and tech to small mid cap, just because they've been down and they're consumer beneficiaries, as well as healthcare that's been down for 3 years. It's a longer term trend, is recovering, and FDA approval process is going to be fast tracked. So biotech, REITs with Fed cutting rates. Energy was my one out of consensus call, saying with oil prices heading towards 50, and I thought it was going to get to 50 because geopolitical tension looked like it was easing, and energy stocks were still doing great. It's hanging in there. So the range that I thought oil traded was going to be 50 to 60. I would, as a contrarian view, buy energy. So, and then consumer stocks, both staples, which I'm a little bit more long, as well as discretionary. That's the benefit of OBBB towards consumers. So this is where you should buy, because these stocks have in their own right gone through their mini recession within their segments. And they're finally starting to have some fiscal backwind, as well as valuations much more kind. So that was my view. Today, in sitting here in early February, I'm still very much of the opinion this is going to continue. Now, having said that, some of the Max 7 stocks, I'm going to pick on one stock, Microsoft particularly. It looks great. It had beat earnings, but it gave certain guidance that were not satisfactory. So stocks down further 10-15% since end of the year. So there are some of these stocks that I'm watching. I want to see a little more flows to see if the bottom is there. But I actually think some of the Max 7 stocks that actually haven't done well in 2025 are starting to look okay. But I will still stick to my theme for now.
One question. You said you sort of like mid caps, and for just for the benefit of our viewers, is there an index that you like, and an ETF that we could use, so where people aren't trying to go and pick a whole bunch of mid cap stocks?
Sure, sure. Well, so can I say, okay, I have to be careful also. I bought mid and small using Vanguard just because I happen to have a Vanguard account.
Sure.
And Vanguard does have a kind of a quality tilt. I think especially in the small cap, I don't like Russell 2000. It has much higher beta. So on an up day, you're going to move more and down day is going to move more. But I also want to be mindful that, I want to own it for 3 to 5 years. And in that view, you want to have a little bit of a quality tilt. And so when you buy Vanguard small cap and Vanguard mid cap, actually it's more in the small cap. What Vanguard does is it looks more like S&P 600 small cap,
I
which
see.
is takes out all the junkier, very small companies, micro companies that Russell 2000 would hold. Now, you're also taking some beta juice out of it, but I'm fine with that. I don't need to own junky stocks just to have beta. I actually did take profit on my small cap last Friday. It ran it ran a lot, and the geopolitics, which we'll get into in a minute, was concerning me. So, and then some of the software companies that are left in the small cap, I didn't like their influence. So I did close that out for the moment.
Right, right. Um, so just to reiterate, I sort of like maybe the S&P 600, some of the Vanguard mid and small caps, just because they have more of a quality tilt, which is really important because you don't want to be in an index. I think somebody famously said that the Russell 2000, two-thirds of the companies don't make any money, and that quality tilt is you make a very good point, is really quite important. And Microsoft, I mean, it's amazing. They had actually a really good earnings report, but they're getting spanked, and Microsoft has a monopoly on Office. Are you going anywhere else for Office? So I think that's a pretty reasonable idea that they might be at a kind of a having sold off substantially. There's maybe some value there. What do you? So I know you said that a couple of the mags have now didn't have great years and now look like they are maybe some value there. And Amazon reports later pretty soon. Do you like the idea of the S&P 500 X the Mag 7? I think Defiance actually has an ETF called X Mag, which means literally the 400 at the S&P 500 without the Mag 7.
All right. Yeah. So given I'm retired but not really, quit working, I've some advisory work. So I have a lot more time. So I've been buying stocks. Hmm? Especially healthcare. I really thought healthcare finally hit their bottom somewhere of last year, been collecting. But by buying a healthcare ETF, you're buying, just like if you buy S&P, NVIDIA, and Mag 7 is the dominant allocation. With a healthcare in ETF, you're buying a lot of United Healthcare and a lot of the healthcare insurance companies. And I didn't like that. I wanted to buy pharma companies. I wanted to buy bio, which is not in healthcare, but bio ETF. So, I bought Lilly, Amgen, and a few other speculative bio companies, as well as I bought Merck, Pfizer, Bristol Myers. I didn't buy J&J, which is by far the biggest. So if anything, I own a pretty healthy allocation to healthcare and bio and device makers like DaVita. This stock didn't go very anywhere, and then it's up 20% yesterday on earnings. I mean, this is the silly part, right? This money flow, and people don't believe it, and once they believe it, then I don't know where all this money comes in. It's flooding with money now. So I actually do like bio medical device. So I'll even tell you, like Boston Scientific came in today, beat the numbers, a bit, but gave a very soft guidance, and market didn't like it. It's down 17%, and it's in my IHI, the iShare.
Mhm.
By a medical device ETF. The ETF's only down like 1%, but Boston Scientific was down 17%. I bought it. Maybe it'll go down more. I don't know. But at least if somebody's going to give me a stock I like Microsoft is something I haven't bought yet. It has a reasonably fine guidance, but if there's a disappointment in the numbers or the forward guidance, maybe it's giving you a chance to buy it. So I bought Boston Scientific to add to my medical device. I own two, by the way. I own the iShare, which is the large cap, and I own Safe Street, which is equal weighted the small companies. There, I'm hoping for some takeout and other activities, and that's done better, right? So
I'm
there's
glad
different
you
ways to play between ETFs and adding some stock, I guess is what I was trying to tell you.
I'm glad you actually expanded on healthcare because there's so many healthcare. You talk about the pharmacy benefit managers who been hurt, like a United Healthcare, because the U.S. government doesn't actually want to pay them any extra money for
Yeah.
Medicare Advantage, right? But the hospital names often do well, and if you pick and choose between the different some of the different pharmaceutical companies and device makers, there's certainly value in it. And it seems, and you bring up a very good point. Boston Scientific had a good earnings report, but their guidance was a little soft, and the market mashes it 15-17%. It seems like you're seeing more and more that even if you beat earnings and beat revenue, if your guidance isn't superb, you're getting punished. And it seems like the market it may pass, but the market is a little moody for sure.
Market can be very moody. So I'll give you another stock because now, like I used to never talk about stock because I'm a macro guy. I make macro calls, economic calls, and then I pick certain sectors that have wind at its back, or try to anyway. So I bought Deere sometime like September, October last year, and I'll even go like into prices like at 440. Like got lucky with catching that one at a good price because it was getting punished for China exposure, and that was out of consensus. And then when I bought it, like, and it was only in October, and so I put a limit order back then, and doing some research. I'm not a bottom up stock picker, so I don't have a very my own price target. So reading a lot of rags that are institutional rags. It's like okay, 535. So I did, and then I forgot about it, right? We don't sit there and watch our stocks that closely. And then it hits last Friday, Thursday, and today's at 555 because now it's about agriculture, the demand for tools, because again, it's related to China and certain disagreements, and now you got to start investing in agriculture equipment makers. So, like this market is so sentimental that people make stories around what they like and what the trend is. And then all of a sudden, a lot of, I'm assuming retail money just comes in and swoops in and just floats the boat. So anyway, I also then, as a result, thanks to that move, reevaluated, my portfolio sell because I put a bunch of sell limit orders, and because I don't watch it every day, I like to do other things than watch the stock market every day. It is. I am noticing that stocks will like go beyond a reasonable price when it's got wind at its back. I own like a couple other stocks like Synopsys, great company, and I bought it actually a lot lower than here because again, it's the China. It got dumped last year because of China story. It rallied nicely, and I was enjoying myself there. And then this last 3 days here with this whole geopolitical issue, all stocks are getting punished, right? And it's down quite a bit. And I'm like, so some of these stocks are just getting swept. If you are in the right sector, wrong sector, and it's less about just individual stock play over a short period. Over a long period, the fundamentals absolutely matter. So I'm looking to pick up some of my so tech sector stocks that I would like to own. I think it's going to get there, like Microsoft, Synopsys, like you mentioned, Amazon. I have that on my list. Palantir. Gosh, I always thought, there's a bunch of tech stocks that I would wait for it to come my way. It never came. I think Palantir at these prices, like you have to ask yourself, when do I want to get in?
I mean, it's dropped a lot from its high. It had a big boost, had a great earnings, day, rallied a bit, and then it's given it all back. I mean, the PE is still, I mean, still high, all things
217 PE, right? Rally 10% on earnings day and down 17 today or something like that. So I agree. Palantir, it's going to be harder to digest. Nvidia's trading 50, but I'd rather buy Palantir at 200. I'd like to see it correct a bit more. Correct meaning overall market flows. Hey, listen, today, if I had to I ask myself, the one thing I worry about is the Iran-US conflict. Talks are off again this morning, and that's apparently why my so-called geopolitical type of just coincidentally, some of my cheap stocks are geopolitically safe haven are up a lot today, right? And so I actually do think some of the tech or high beta stocks, let's just give it some few days to see what Trump wants to do next.
We were chatting just before the show, and you had mentioned that you had built your sort of portfolio in sort of a safe haven, almost unconsciously or semi-consciously, I should perhaps, into a safe haven status. So you just mentioned, like, what are some of the names that you own that are outperforming? Because this morning the U.S. and Iran seem unfriendlier than 24 hours ago. Like, what stocks are benefiting from like that safe haven sort of switch?
Yeah, today is an unusual day for twofold. One, some of my biotech, Amgen and Lilly announced and beat consensus to satisfaction of investors. They were both up 7% in the morning. That dragged entire healthcare and bio up, other than some of the speculative small ones that I own, because those are not on investors' radar screen. That's for those I'm looking for a home run at some point in the future. So that drove the market up. I own quite a bit of energy, upstream, midstream, Chevron, Conoco, Kinder Morgan. I also like natural gas, right? And they're up. They've had a lot of positives due to cold weather, but beyond that, there's just abundant of natural gas in the U.S., but they're all spoken for as we get into next year when infrastructure it comes to shape. So I'm long that play. Staples. I mean, I own consumer staples and I own consumer discretionary, but I'm staple heavy. A lot of those are defensive during these periods because institutional investors can't leave the equity market, right? Their clients gave them money to buy. So they'll be shifting from one sector to another, not leaving the market. And that money, and that was my call at the end of the year at another show that, go back to 2000 March, economy was perfectly fine. We didn't have recession till 2001, but in 2000 when tech started to delever or come down, money needed to find somewhere else. So in that year, growth or techs were down 20% as of index basket in S&P. S&P was down maybe 10 or so. And then the value index, which has shriveled up all through the late 90s. So we're seeing exactly the same characteristics, right? In November, when I was making these calls, Staples was like 3% of the US S&P 500. Energy was like, I forget the exact numbers, like 5. These sectors I'm talking about were down quite a bit didn't move much in the last 2-3 years, that they're such a small piece of the index that it didn't matter. You just didn't have exposure to them because money just left flow-wise. So like Verizon's up 15% since I bought it 2 months ago. Coke is up like 15%. Like, well, are we kidding me? Like these stocks were just getting beat up. So that's my thesis on why I thought you got to have exposure because money's going to flow there, right? So that is kind of like the free ride that I thought I was going to get. What I didn't anticipate when I built this portfolio was I have a very geopolitical heavy or like days when geopolitical news goes up. So I was looking at my portfolio, like looking at this week. We had Monday, markets were very happy. I was down, down actually reasonably meaningfully because energy stocks gave up, and Some of my staple stocks gave up. And then Tuesday and Wednesday, as markets were down, I'm up. Like I'm having like one of my biggest days today because the money just wants to come hide where I'm at. So like game of Monopoly, I happen to own these properties. I used to joke about I want to own boring stocks. My so-called boring real estate on a Monopoly game board is where they're coming to park their cars, and so this is going to, I think, continue for a while. But even I have to ask myself, how much can they run? I mean, some of these stocks aren't meant to, they were very cheap in November, December, maybe October through November, December. But today they're fairly fair value.
There's something, I mean, I think you may have constructed a portfolio that's going to actually keep you sane, because what's better than making money when everybody when so many people are like, have their head in their hands, right? So if you underperform a little bit when everybody's doing well, that's probably okay. But if you can outperform, if you can survive or even outperform when everybody's going, oh my goodness, that's actually probably a pretty good portfolio, and maybe a good time to really honestly have that. So I want to switch gears a little bit, talk a little bit about politics. Well, politics as it applies to economics. The last time in 2017, when Trump, appointed the Fed chair, Kevin Warsh was kind of the bridesmaid, and this time he's the one holding the bouquet, and in something of a surprise. And the view was it actually, maybe triggered a little bit of that, the sort of sell off, certainly in metals, late last week. He has a history of actually being hawkish, and has always wanted to reduce the Fed balance sheet. I think he quit the first time in 2011 because he disagreed with what the Fed was doing in QE. Presumably, I think he's probably convinced the president that at least in the current moment, lower rates are warranted. Any real concern that that Trump wanted a dove and he may have picked himself a hawk?
I actually like the setup. So you have a situation where Kevin Walsh is historically been a hawk, and so people are worried. Market's worried. So that announcement day, market was off. I'll say this: Kevin Walsh. I don't know if he's saying this to be nominated or he believes in it, and I presume he believes in it. He's saying with AI productivity, I think I can cut rates because inflation will be contained. So he's funny. He's going to come into the chairmanship in June, and that's when they're likely going to cut anyway. So he may be biased
Good
to
timing.
that. Yeah. So, but I presume if he makes the dates and he's there in June, that's highly likely they're going to cut anyway. Having said that, Kevin Walsh, I don't know if you know, and Besant worked together under Druckenmiller at his family office. So I think Druckenmiller was, I think Besant was CIO and Walsh was chief risk officer. And so they worked together on the investment framework, right? One looked at the uptail and the other one looked at the downtail, and they invested together is basically what they did. So this is a very important dynamic that they have, right? I think what the market's worried about is his view on balance sheet. Kevin Walsh doesn't believe in large balance sheets. So there's fear that he's going to shrink that balance sheet. And if, as a result, crypto, I think it was one that benefits from that large balance sheet and yen carry trade, and that might also be at risk. So, we have like crypto's not happy, right? They would have been a lot happier with the BlackRock Rick Reader, who's, pro crypto. I actually think Walsh was by far the best in terms of experience candidate. Having said that, I also think going forward with so much debt outstanding by the U.S. government, the fact that the Treasury and the Fed need to work so closely together, and these two actually understand each other. I don't think they have to complete they could probably complete each other's sentences. So in this regard, I actually think this might be a good dynamic. And they're both objective and independent enough that, we don't have to worry about, oh boy, they're all going to follow President Trump's agenda. I believe we're going to see inflation, a whiff of it, maybe middle of the year, maybe a bit later. And when that starts to happen, the long rates, 10-year and out, should not be invested. And that move's already starting to happen. The move this year so far is really sideways to we're at the high end of that range we've seen in the last three,
Right.
6 months. To me, that's more of a growth, the economy is growing story. Um, we're going to see a move where 10 years is going to touch 4.5, and 30-year obviously is going to well past 5%. I think that will persist for next 2, 3 years or longer even. And this is where I believe AI productivity, as Walsh says, and it's coming in, by the way. Productivity has been like on the high end in the last few months here or few quarters. Having said that, I just don't see it accelerating that quickly. I call it the S curve of technology change. I've talked about that quite a bit. The reason technology, even if it's available, doesn't change as quickly as it should is because human beings, we don't like to change so quickly. Huh? If you don't believe it, let's talk about the Zoom that we're using. This technology, using video conferencing, I was using it back in 2002, 2003, working out of London, daily calls with the US office. It wasn't Zoom, but it was video conferencing. And then most people didn't use it until we were forced to. And during COVID, it was exclusively used by all of us who can afford it, right?
And it made things, it really could change the game in a way that, will, I know all the banks have all their staff in, but the rest of the economy, there's a lot of, it's changed things in how people work and how productive people can be in a way that couldn't have been imagined before.
Right. So back to then my theme. Innovation requires a couple of things. One is the technology being available, but then two, if it's about our day-to-day productivity, we have to embrace it and really use it. And we will use it marginally until we're forced to actually embrace it a lot faster out of necessity. And I think that's what I am hesitant that productivity will stay at this high end of historical levels. But what we could potentially see is massive productivity, and it will come soon enough, maybe next couple of years, but it's just not going to be like quick.
I think it's a great point that you make, and Warsh has had experience in the private sector, worked for Druckenmiller, but I don't think a lot of people put together exactly what you put together, that these two guys work together. They know each other. They presumably trust each other, and have had success before. And sort of, it's like not to disparage Powell. I think he's done a decent job. Got handed some pretty tough situations, but at the end of the day, you still have two smart guys in the room. Which the market should be happy about. One question is there's always been an open question, and Powell won't answer it, smartly, is that there's always been a possibility that he could stay as a governor after his term as chair expires in May. With Warsh, do you think he's just, what, it's in good hands? I don't have to be constantly beaten up, by the president of the United States. I'm gonna actually happily retire. Do you think he's more likely to do that with Warsh?
Yeah. So can I say this? It's so ironic that Donald Trump would be the reason where Walsh's approval by Senate will be delayed. He's hearing for confirmation. It will be Donald Trump, President Donald Trump. That's the reason for Powell not leaving as appropriately as soon as his term's up, like prior chairmen. Because as long as he's, the Fed is being under attack for their spending or misuse, he can't leave. He needs to see that closure before he leaves, unfortunately. So if Mr. Trump focuses elsewhere and leaves it alone, I think the Senate hearing should go well, and Powell will retire as all other Fed chairs did prior. So you need to close out some of these legal attacks on the Fed.
Yeah, well, Senator Tillis on the banking committee said, I'm not advancing anybody until you get rid of it, which actually gives the president, if if he wants to do it, a nice way out. I got to get my guy in there. All right, fine. Just have the DOJ. We nothing to see here. Let's move along.
One thing I have a lot of my pros and cons of Donald Trump, and to be fair, he's very flexible.
Yes. Transactional, I think, is the term most people use. So last question. Any unusual indicators on your personal dashboard that, when you turn on the computer, in the morning, something that unusual that not a lot of people might look at, but something that you look at as like to give you a signal? Anything like that?
I think today, my biggest worry this morning was what's Trump going to do next? What's happening in Iran is very severe. And local Iranians, and I know some of them live here, they even are telling me they'd rather have Trump come and do a targeted bombing on Tehran rather than keep the current administration that are killing demonstrators. So situation's dire, and there's no improvement, or just getting worse. So they rather have, Trump's very aggressive methods rather than leave it decaying at this path. And then Mr. Trump, I said, Mr. Trump is, obviously after U.S. interest, boots are not going on the ground, but yet they still want it. So I think we have to watch for what's next on Iran. That might be we can't invest on geopolitical fears, but this one needs to be respected in the near term.
So I
I hope it's going to resolve peacefully.
Without further tremendous loss of civilian life, which unfortunately I think we have already seen. But I think your point then is, with this president more than anybody else, you better watch Truth Social, because sometimes you can't take him seriously on everything he says, but sometimes he gives some pretty good clues there. Well, Jae, thank you so much for this deep dive into what you're thinking of the markets. Looking forward to see how this year turns out and having you back on the show sooner rather than later.
Thank you.